Hello, fellow traders. 'Tis I, the Rumpled One. It is Sunday, June 17, and the year's 2018. Let's talk trading. The weekly open and gap. Before we get to that, money and risk management, let's make sure we do a good job with our money and risk management this week. Okay, we're looking here at the monthly, the yen, and you can see we're still in that upper wick zone. But let's go take a look at the gaps here. Okay, we've had a gap fill on the dollar yen. I got in on that action. Usually I don't, but I just had to jump in today. Usually I've got something else I'm doing early Sunday, so I don't always get those first gaps. But I got some of that one. But you can see here we still have some trades open. If you remember last week, some of these gaps filled in nicely during the week. So even if you don't get them on the Sunday/Monday trade, you can still take advantage later during the week. You can see here the spreads are just slightly high. They usually tighten up a bit, but they're not too bad at the moment. And you can see here we've had some movement off of the open already for the week. Some nice movement. And looking at the daily, you can see here pretty much a doji, meaning undecided between buyers and sellers. So we're down here. We're going to be pretty much in a wick zone until we break out one side or the other. And if you can see here, the ranges, so we've got a 44 on the pound franc, but it's early, so we don't have much of a range. Looking here, you can see short zone. There was the D1 pivot points, already taken that out. Whereas that's also, yeah, it's the pivot and the future pivot. It looks like they're overlapping here. And of course, no rat zone trade right now. But you can see we're in the coming out of that short zone. So look to take some shorts here, and probably somewhere if we get down to here, that's about where you might start thinking about taking some profit. Or even here. See if it can crack through that 50. That's what we'll be looking for. And once again, we started here. Let's just take a look. You can see here, yeah, pivot and future pivot are the same. We took out that pivot. That was one of the reasons I jumped in. And once again, we hit that pivot. We have a missed pivot here and a missed pivot here. One of these is going to get taken out soon. Price action, 2-ball, and going red at the line. And the lines here, you can see open, close. They're just a pip apart. And we're just going to take the H1 at the line. We're into the third hour of the day. And here you can see there's not much space between the wick zones. So we'll just see. We know price doesn't like staying in them, but we got to look to see if we can escape. See, some days you're just not going to have a trade on the pair that your favorite pair. So you can either just wait for that pair, for that trade to materialize on the pair, or you could go looking for another pair. That's up to you. You can see here we've got the holo. So you look to go long here, short here until it changes. And I just turned on the computer just a little while ago. And you can see right here we had a short on the M15 that produced some pips using the inventory reduction bars. And looking at the Einstein trade. Well, that's interesting. I think, did I change something? I think I might have changed something on that program. But we'll start fresh here. Long trigger, short trigger. Which way is price moving relative to when you started? And this week I'll be visiting some more reasons why you do not get better at trading. It was funny, somebody posted, I think when I originally started, I said there'd be about 3 videos. He had to laugh because I think we're up to 16 and counting. But as I, do research, do study, get stuff in the mail, I see something that we can apply to trading. I mean, this whole series started out because I play bass, as some of you may know, and there was a somebody who said why you don't get better playing bass, and he listed 5 things, and I said, I can apply that logic to trading, and then it just took off from there. So that's it. Back here on the weekly, you've got the Aussie US dollar. Well, let's just look at them, see what we've got here. There's really not much. They're only 5 pips. Canadian Swiss franc. Down 18 pips. Well, you can see here, it's already come off the low, 16 pips. The Euro Australian dollar. It takes a while because normally I don't trade these pairs. You can see here, it's trying to fill that gap. Euro franc. It's trying to fill that gap. The Euro pound. And there's about 8 pips to fill that gap. The Euro dollar. About 15 pips to fill that gap. I kind of like the way that chart's looking. When you scrunch it, you got to get another tick, and then these will sort themselves out. So we look at the monthly. You can see here, we're in that wick zone of the month. The month is red. Be looking to short here, looking to long here, if you're trading off the monthly. Now, off the weekly, could almost just jump in right here. That looks like a strong trade here. See, we had a doji and it ran up. So long as it doesn't crack that low, looks like we've got a nice trade to the upside. We've got the New Zealand franc. Looks like it just about closed. New Zealand yen. It's just down 7 pips. You might want to grab some pips there. New Zealand dollar. Down 7 pips. I'm going to take a look at the Canadian dollar at the 132. Let's look at the monthly. Oh, you can see here it broke out. And I guess US and Canada are having some trade war talk or something to that effect. And it looks like the dollar's winning out. And you can see here on the weekly, it would be interesting to see if maybe price comes up to about 34 before reversing, or if it reverses right around, say, 32, 60, 50 area, somewhere right around here, based on this candle. And we can scrunch in on the daily, and you can see here there was a consolidation or ranging, and then it came down to another level, came down to another level, and came down to another level. So the question is, right now we've got these two big greens in a row. Will it turn around and fill those back? Or will it continue? That's what's called trading. So you trade what you see, even though some guys say trade what you think. And it's, I think you trade what you see. Now you might anticipate certain things. So if this happens, then you're going to do that. And maybe that's what he meant by thinking, because you're not supposed to think while you trade. You're supposed to execute. You should have your trading plan in place ahead of time. And that's why I laid out these monthly levels and the weekly levels for you, and the daily levels. You can just play off of those levels. In fact, I thought that's the wick zone. What's going on here? I thought I came out with I thought I had another chart I set up. Maybe I'll bring that tomorrow. But anyway, okay, fellow traders, just remember Sunday, Monday, gap, high percentage of close. Just take the pips if you can. And as always, it's not what you trade, it's how you trade it. So let's have a nice week of draining the banks.